Hey, what's going on, everybody? Hayden Crabtree here, author of Skip the Flip, Secrets the 1% Know About Real Estate Investing, and I'm coming to you today. We're going to talk about when commercial real estate is a good investment, when it is not a good investment, and how you can distinguish the difference before you actually get into a deal. So, my intention of today's video is to give you 4 things you can look out for before you get into real estate, specifically commercial real estate, to make sure this is a good investment of your time and energy, but most importantly, your money. So there are gonna be 4 topics today. I don't wanna waste any of your time. I'm a huge commercial real estate fan, and I wanna dive into this and talk about what you can learn from me today so that you can make a good investment in the future. Let's do it. So the number one thing you need to look out for before you go in, you buy any type of commercial real estate, the number one thing is make sure you're buying in a good market. So let's define that. What is a market? To me, a market is an area. A market is a city. A market is a zip code. A market is a town, right? So there's a couple different ways to look at it, but market is the land area in which your piece of property is located, right? So they say the 3 most important things in any piece of real estate are location, location, and location, right? So the really kind of what that means is what market are you in, where are you located within that market. So it doesn't matter if you're in the very best spot of a market. If the market itself is really, really bad, then that's not a great place to be, right? So I want to give you guys a quick example of what a great location in a bad market looks like. I was looking at this deal maybe 6 months ago, depending on when you're watching this video, and this deal was really high cash flow. It was a self-storage deal, which I love self-storage. Doesn't matter. We're going to get into that in a second. But this deal itself was on a great highway, came on a big lot, it was cash flowing. Everything about this property screamed this is a good investment, except for one thing. And what the one thing was is the underlying market that the property was in was really, really bad. And so what I mean by that is the property itself was great, but the town it was in had pretty much a dyingness to it, right? Everything around it was kind of dying. There wasn't any growth. It wasn't a booming economy. So what this town was is it's Fort Valley, Georgia, okay? And so Fort Valley, Georgia, seemingly nobody's ever heard of it. Doesn't mean that that's a good sign of a market or a bad sign. There's plenty of great markets out there that you probably haven't heard of that have booming economies. But essentially, Fort Valley, Georgia, its main economic driver is Bluebird buses, okay? So Bluebird manufactures most all of the school buses everywhere, and essentially the town had not been growing at all. Bluebird buses, I looked in the financial situation, they as a company, they weren't really growing and doing well, and the town was kind of built around this Bluebird bus business, and most of the town's jobs came from there, and there were other jobs that came off of that. But whenever a town has one main economic driver, like Bluebird buses, where everyone in the town knows somebody who works there, that's pretty much the only business in town, that's a really vulnerable place for you to be as an investor in a market like that. Because what happens if Bluebird buses isn't willing to change to electric vehicles, and Bluebird buses may not be around in 10 or 15 years? Or what if, because of COVID, all schools forever stay online and there's no need for school buses in America? I don't think that's going to happen. I'm just telling you, this is a risk. This is a sign of a vulnerable market, right? So having the jobs, having the population growth, having strong household income, all of those things lead to a strong market. So before you go get in any piece of commercial real estate within that market, you need to make sure that the market itself is strong. It's like building a house, right? If you don't have a strong foundation, if you don't have a good foundation, doesn't matter how great of a house you have, whatever you build on top of that, it's not going to be good in the long term. And so that's how I think about a market too. The market is the foundation to your investment. If you have a great, beautiful house built on a bad foundation, no good, don't live there. But if you have a strong foundation, you can build whatever you want on top and feel really good about it. So that's the same thing with investing in really residential or commercial real estate, is you want, right, a strong foundation. That foundation is a strong market. So that's number one piece when commercial real estate is a good investment, is that it has a strong market. All right, so the number 2 piece when commercial real estate is a good investment is when your product is in demand, okay? So what do I mean by this? Commercial real estate comes in so many different colors, so many different shapes. You could have, multifamily apartments, you can have self-storage, you can have office space, you can have golf courses, you can have resorts, you can have restaurants, you could have medical buildings, you can have so many different things. You can have, parking garages. just so many different types of commercial real estate out there, but it only makes sense to buy, one, when the market's right, and then two, when your product is in demand. So let's go over a quick example. If I wanted to buy a piece of commercial real estate, and let's say that this piece of commercial real estate was a golf course. Okay, so golf course, people come, they pay you to play on their course, you keep it up, you have your expenses. It's a piece of commercial real estate. Okay, if that piece of real estate was located in, you know, a market where nobody liked to golf for whatever reason. Let's say the weather is horrible there and nobody can ever get out on the golf course. It's always cold. Nobody ever wants to golf. Your product is not in demand. Okay, but what may be in demand in that market instead of a golf course is heated storage, right? Where people want to store their vehicles to when it gets really cold there, their vehicles don't, lose the ability to start, deteriorate, things of that nature, right? So we want to make sure when we're investing, whatever we're buying is in demand in that market. So a lot of people out there, a lot of places out there, office space, right? What used to be in demand is no longer in demand. And so because of COVID, we couldn't really see that happening. But how can you turn your piece of commercial real estate into something that is going to have demand? Where is demand going to last? Where is demand going to continue? Things like multifamily, I think, will always be in demand. Storage will always be in demand. Restaurant space will always be in demand. Warehousing will always be in demand in these certain markets. So if you're buying something in a market, make sure that that market has that demand, right? It doesn't make sense to go and, build condos in the middle, high-rise condos with big views where normally you'd see at the beach, where a ton of people can see out of the ocean and things like that. It wouldn't make a lot of sense to do something like that in a place that really has no sights to see, right? And land is really, really cheap. So make sure that whatever you're buying, that product that you're buying, whatever type of commercial real estate it is, whether it's apartments, storage, blah, 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 whatever it is, make sure that that is going to be in demand in that market. And one of the best ways you can do this, you go, okay, well, Hayden, that makes sense, but how do I actually make sure this product is in demand? Look around the market, see what other people are doing. So there's this concept called secret shopping. And what secret shopping is where you act like you're a potential customer for this. So let's say I wanted to buy a restaurant space and I wanted to know if restaurant space was in demand or not in demand, right? I would call around to other restaurant spaces that were available for lease, and I would simply say, hey, tell me about this. I'm looking at it. The restaurant I'm starting to think about, starting up, it has this and this. Do you have a lot of people who want to buy this, to rent this space from you out? Just gathering details about it. If you were looking at multifamily, you would call other multifamily around and you would say, how long has this unit been available? What are the prices on it? I don't know if I'm moving for another month or potentially 3 months, depends what happens at my job. Do you think that this will still be around? And based off of the response that you get, if you're secret shopping and the people are telling you, oh, this is going quick, we've had 5 people come and look at it, then you can say, okay, well, there's a sense of demand here. Other people are looking at this space. But if you call them, they go, oh, I'm sure it'll be available. We haven't had anybody interested for months, at a time. And, we were thinking about dropping our price because it seems like nobody's interested. Like, these are signs you can pick up from to understand, is this product really in demand or is this product not in demand, right? So number 2 piece, make sure whatever you're buying is in demand. So the third piece when commercial real estate is a good deal, when it makes sense as an investment, is to make sure that you're buying with the chance to increase revenue and increase value. So I'm a value add investor. I want everybody in the world to be value add investors because that's where you're gonna make the most money. And essentially what I want in a piece of commercial real estate is I want to make sure that I can go in and I can make this property make more money, right? Because commercial real estate is based off of a cap rate. So income minus expenses equals NOI. And our NOI is how we value our commercial real estate. And so if I can go in and I can boost my income, leave my expenses the same or even reduce them, I'm going to be able to increase my NOI, and I'm going to be able to increase the value of that property. So whenever I'm looking for any type of commercial real estate, I always want to make sure there's something I can do, there's some lever I can pull, some action I can take in order to make this property generate more revenue and therefore increase my cash flow and also make sure that the property value goes up as well. So if we're looking at something, let's call it, we're looking at a 10-unit apartment building and every single unit is rented out and we're looking around, is there an opportunity to raise the rents on the customers that are in there? If we have 10 apartments and everybody in there is paying $1,000 a month, that's $10,000 a month, if I look around, are there other things I can do to increase the income to more than $10,000 a month? Number one thing I could look at is, are other apartments like this going for more in the market? So if I look around at secret shopping, like we were just talking about, and other apartments are going for $1,300, $1,500, but I go, hey, maybe here's an opportunity I can raise revenues, but actually when these customers move out or it's time for their leases to renew, instead of charging them $1,000 again, I'm going to go in, I'm going to charge them $1,500. I'm going to charge them $1,300, right? And so at that point, we're talking about increasing our revenue, increasing our NOI, and making our investment, our property, more valuable. And so that's going to give us outsized returns, and then it gives us a lot of options. We can refi, we could sell, we could just hold on to it and cash flow, way more than your average property would. So when I'm looking at something, that's what I always want, right? There are opportunities out there to where, hey, it's 10 apartments, $1,000 a month, and really $1,000 a month is pushing it in this market. You're never really going to be able to get any more money out of that. So then I look around for other places like, can I add a laundromat? Can I charge pet fees? Can I build more apartments on this property? There's a lot of different levers you can pull in order to increase the income, but for me, I always have to have some kind of thing that I can do in order to make the property make more money. It doesn't really excite me. It's not an exciting play for me, and I don't think it should be for you either, to just buy 10 apartments that are making $1,000 a month, and that's pretty much all it's ever going to do, right? I mean, I can sit here, I can wait for inflation, and I'm still going to make a good return, but I would always prefer to look for another investment in which I can make huge returns and I can actually control that investment, right? Skip the flip, we talk all about control and how much I love control, and that's why I love real estate so much. So third thing you want before going out, buying any piece of commercial real estate, ask yourself when you're looking at it, how can I make this property make more money? And if the answer is I can't, well, then I really suggest you probably look somewhere else, unless you can buy the property at a discount, and then it makes sense. But let's say the apartment building is worth $1 million. If I can't raise the rents any, then, and I'm going to go in and pay $1 million, it's not that exciting. If I can go in and I can buy it for $900,000 or $800,000, that excites me, right? Because I'm getting a discount on the property. But paying $1 million for a property that really in the next 2 to 3 years is only going to be worth $1 million, $1,020,000, $1,030,000 after inflation, right? That's not very exciting. We want something where we can go in, buy a property for $1 million, raise the income 50%, and raise the property value to $1.5, $1.7, $2 million. That's the kind of commercial real estate that I love, that I think you should be getting into as well. And so the fourth piece of when commercial real estate is a good investment is whenever you can buy it and it has multiple tenants. So what do I mean by this? If I can go out and I can buy an office building that only has one tenant in it, let's say it's a 20,000 square foot office building and it has one business in there and it's a great business, that's fine, that's good. But realistically, that business, kind of like we talked earlier about Bluebird, the school bus business, that business, it has risks, right? Every single business in the world has risks. And for that reason, whenever we're in commercial real estate, sometimes we're doing B2B and sometimes we're doing B2C. So B2B, that's just a business terms, meaning business to business, right? So B2C is kind of the opposite of that, business to consumer. And so Amazon is a business to consumer platform, right? You are a consumer, you get on there, that's a business selling to a consumer. But other things like Oracle, right? Software. So Oracle sells software to businesses. So they're a business to business. That's funny to say. They're business, B2B business. And so you as a commercial real estate investor could be B2B or B2C. So in the example of the office space, one customer, B2B, that business you have is going to face risk. They are the only person paying your rent. If they choose, to not pay their rent because their business goes down, whatever it may be, that's a risky situation. So I like to buy things with multiple tenants, okay? So it doesn't necessarily have to be B2C, but let's do a couple of B2C examples, right? Multifamily apartments. You're a business, you're selling to multiple consumers who are living there. They're not running their business out of these apartments. What they're doing is they're actually living there. That's a personal consumer use for them. Storage units. So I do a lot of storage units. And I do B2B and B2C. Sometimes businesses come through, they rent space from us for, their inventory. Sometimes contractors will leave their supplies in there. And then there's also B2C. So people will come through, people will put their couches in there. People will store their boats and their RVs with us. There's a lot of different uses, but we're diversified in that way. So if one contractor businesses goes out of business, well, guess what? If it's a 200 unit self-storage complex, I've still got 199 other people who are going to pay rent. So I might not make all of my cash flow, but I'm not going to go cash flow negative. And that's why I like multi-tenant properties. And so it could be an office space, could be 20,000 square feet. You've got 4 different customers in there, each taking 5,000 square feet. I think that that's a fine situation. That is multiple tenants. And so normally whenever I'm looking at investment, if it's only got one tenant, that really scares me, right? I think that there are some big tenants out there. You know, if I was leasing to Amazon or if I was leasing to another huge business, that would make me feel a little more comfortable. But just having some investment, having some property where I'm just leasing it out to one small business, I want to feel really confident about that person knowing their business and having a really bulletproof business. Otherwise, there's risk not only in their business, but me as the landlord depending on them to pay me rent every single month to cover my expenses, to cover my mortgage, and then ultimately cash flow in my pocket. That's a risk. So that's why I like multiple tenants. It doesn't have to be just B2B. It doesn't have to be just B2C. It can be B2B and B2C. It doesn't really matter. Just know that you have multiple streams of income into that one property so that your risk is diversified. So that's really the last piece that I look for to make sure and know when commercial real estate is a good investment. If it has all 4 of those things, it makes a lot of sense, right? I would go through, I would make sure the numbers make sense, and I would make offers on properties that meet all of those criteria. So let's go back over when it makes sense to buy commercial real estate, when it can be a good investment. Number 1, buy in a great market. Number 2, buy when your product is in demand. Number 3, buy with the chance, not even the chance, the absolute opportunity to raise revenue, income, and also your property's value. And then number 4, make sure you're buying it when you have multiple tenants. So we talk a lot about this on this channel. If you haven't subscribed already, I'd love to have you subscribe. I'd love to have you smash that like button down there. If you hadn't already got it, pick up a copy of my best-selling book, Skip the Flip, and I'll see you guys in another video. Have a great day.